Today, I'm going to give you a crash course on restaurant accounting, what it's all about, what you need to do to have some success with it, because the truth is, it's overwhelming. All right, and what prompted this video in the first place is last week I was at a bar helping someone I know. His name's Phil, and I was helping him get his bar systemized, and I was helping him fix a lot of the problem areas he was having. And like many bar and restaurant managers, he did not go to school on how to run a business. He just sort of rose up through the ranks from server to bartender to head bartender to bar manager to GM and so on and so forth. And he had all this responsibility just dumped on him. And so when we got to the part about financials and what they do, or what they were failing to do as it turned out, in order to track their revenue and expenses and basically determine the financial health of the business, he started to freak out. All right, became unglued, and I thought he was going to short circuit on me. So I slapped him in the face like you would a cartoon character. And I was like, pull yourself together, man. All right, I didn't do that, but I did calm him down. I told him everything's going to be okay, and I gave him the basics of accounting and what he needed to do in order to get his finances in order, because that simply wasn't his strong suit. And in the end, we actually had him hire an online bookkeeping service to help him do it all, which is well worth the money. Believe me, I do the same thing for my business. All right, but the point to all of this is, I know after helping him that there are a lot of Phils out there who need help in this area. So I'm going to give you a crash course in restaurant accounting so you have a basic understanding. Okay, so enough blabber then. Let's talk about accounting, and let's try not to bubble over with excitement. All right. Again, it's the basics of accounting to make sure you're doing something to track your financials. So if you're an accountant, an actual accountant, and you're watching this, don't jump in the comments and start criticizing and be like, you didn't cover the acid test ratios and the inverse consequences of anti-dilution or whatever. All right, leave us alone. Go mark something down in a ledger. Okay, so let's jump in and start learning. All right, and first off, I don't want to insult your intelligence, but for some of this, I'm going to assume that you're a child and you want to know everything. Okay, so let's start with, what is restaurant accounting? All right, I told you we're starting basic. Well, restaurant accounting is the process of recording, classifying, and summarizing all financial transactions of a restaurant. Okay, and that means that you're going to be tracking things like revenue, expenses, assets, liabilities, and equity. And this is going to provide a clear picture of your restaurant's financial performance, which means you can then improve those areas that are losing you money so you can make more bling bling, as they say old school. Okay, well, how does accounting actually help you? Well, effective accounting is going to help restaurant owners and managers like you make informed decisions. It's going to help you maximize profits, avoid financial pitfalls, and stay in compliance with financial regulations. Okay, so accounting actually helps you do things like control expenses, all right, establish menu pricing, staff accordingly, control cash flow, improve tax reporting, and create growth. All things that you can get from your financial reports. Okay, and then we briefly touched on this, but should you do the accounting yourself or hire someone? Well, if you're good with numbers and you're a quick learner and you have large chunks of time to track it all, then by all means go for it. Okay, the problem is, since you're watching this video, I'm going to assume you're not an accounting expert. So in my opinion, you either need to have someone else do it. If you have like a manager or who's great at this stuff, then that's great. All right. Otherwise, I would hire an accounting service. It's going to pay for yourself. I'm going to have more on good accounting bookkeeping services coming up. Easy for me to say. All right. Next up, what are the types of restaurant accounting? All right. Well, we have financial, and this deals with the preparation of financial statements, such as income statements, also known as the profit loss, balance sheets, and so on and so forth, which provide a snapshot of the restaurant's financial health. We have the cost accounting. This focuses on the cost of goods sold and helps restaurant owners understand how much it costs to produce each menu item. And then finally, we have managerial, which involves the use of financial data to make informed decisions about the restaurant's operations, like we just talked about. And so then I have owners and managers ask me, they're like, Dave, they say, because that's my name. They're like, Dave, what is the difference exactly between bookkeeping and accounting? Well, bookkeeping is the process of recording financial transactions as they occur on a daily, weekly, and monthly basis. Accounting, on the other hand, is the process of summarizing, interpreting, and analyzing the data in order to make intelligent decisions that improve your restaurant's bottom line. All right, but really the two go hand in hand like Hansel and Gretel. Okay, you need both to make a great story. All right. Next, we have the accounting methods, specifically accrual accounting and cash accounting, which you might already know about. But the main difference between accrual accounting and cash accounting is the timing of it all. Okay, of when the revenue and the expenses are recognized. Okay, cash accounting recognizes revenue and expenses only when the money changes hands, while accrual accounting recognizes revenue and expenses when they are incurred or the date on the bill or the invoice, regardless of when the money is exchanged. Okay, well, which one should you use? Well, if you want me to just give you an answer so you don't have to decide, I would say to use cash accounting if you're a smaller business. And I'm going to tell you that because, quite frankly, it's just plain simple. It's a lot simpler than the accrual method. All right, with that said, if you want an accurate financial picture of how your business is doing each and every month, accrual accounting is going to be the way to go because it's going to show you exactly what happened each month as far as your expenses and your income go. For example, all right, let's say that you rent your place out for like $2,000 a night. And let's say someone books it on September 13th, so you create an invoice, but because they are irresponsible and they're inconsiderate, they don't actually pay you until, say, October 4th. All right, that's when you actually get the money. Well, really, you earn the money in September, so it should be recorded as such. But with the cash accounting, you record it when the payment comes in, which is October. So now income that was earned from the business that came into September is now showing as income earned during the month of October. Okay, do you see how the issue of accuracy comes into play here? Okay, so then you're like, well, then why not just do accrual accounting? Well, because accrual accounting is more complicated with a lot of extra paperwork, and you have to keep separate track of your cash flow this way. So if you're already overwhelmed in your restaurant and you don't want to be more overwhelmed, I suggest you do cash accounting because your income and expenses should only overlap by a few weeks, and so your overall view of your income and expenses will still be relatively accurate. Okay, does that make sense? All right. So next, let's get into common accounting terminology, which you should not only know what they are by definition, but you should know how to use and understand each one to your advantage. Okay, I'm just going to read them off really quickly. COGS, which I'm sure you heard of, this is cost of goods sold or the cost of producing each menu item. Accounts receivable, this is money owed to the restaurant by customers who have not yet paid their bills, like the person who rented out your place, like I just talked about. If it's not coming in, that goes under accounts receivable. Accounts payable, this is money owed by the restaurant to vendors and suppliers, and I'm sure that happens to you sometimes if you're behind on payments and you have to pay your beer vendors. Prime cost, this is the cost of your COGS and your labor combined, and prime cost is a very important metric to track. I'm going to talk more about that in a little bit. Your profit loss statement. This is a financial statement that shows the restaurant's revenue, expenses, and net income over a specific period of time. In my opinion, the profit loss statement is the most important document that you can have on your reporting and your accounting. Your balance sheet. This is a financial statement that shows the restaurant's assets, liabilities, and equity. And your cash flow statement, which is a financial statement that shows how cash is moved in and out of the business during the period covered by the statement. And then finally, we have the chart of accounts, which is a list that defines the area where the money flows in and out of the restaurant. Okay, so let's go over these a little more specifically. Okay, what are COGS exactly? Well, COGS are the cost of goods sold, includes the cost of all the ingredients that go into each dish or drink. Okay, it also includes the cost of any packaging materials such as containers or napkins, as well as other supplies used in the kitchens. And COGS can be calculated by taking the beginning inventory, adding purchases, and subtracting the ending inventory for any given period. And then, of course, the resulting figure is the total cost of goods sold for that period. Okay, and it's essential that you keep track of the COGS because it's going to directly affect your profitability. Okay, and to keep your COGS under control, you of course need to keep an eye on your inventory levels. And by tracking your COGS and taking steps to control it, all right, you're going to ensure that you're using high quality ingredients, you're pricing your dishes appropriately, and you're maximizing profits. Okay, let me give you a quick example here. All right, if we look at a quick example of the math formula I just talked about, let's say you take your beginning inventory on June 1st and you have $12,743 in sitting inventory. That's wholesale value. Okay, that's what you pay for it. And let's say that your June purchases are $11,500. And then you count again at the end of the month, and it's $12,158. So if we put that all together, we take the beginning, we add purchases, we subtract the ending, you're going to get $12,085. That is your June COGS. Does that make sense? We got it? Okay. Well, let's talk about prime cost. What is prime cost exactly? Well, prime cost in a restaurant refers to the total cost of goods sold, your COGS, and your total labor costs. Okay, it's the sum of all the direct costs and expenses attributed to the creation of menu items, including cost of ingredients, the packaging, direct labor cost, like salaries and wages and payroll taxes. Prime cost is a critical metric for restaurants because it represents like this larger expense for almost all the restaurants, and it's directly related to the profitability of the restaurant. All right, and by controlling the prime cost, you're going to be able to increase your bottom line and put money back into your bank account. Okay, and in general, your prime cost should be about 55 to 65%, depending on what type of restaurant you have. You might be fast casual, you might be fine dining, but that should be the range. So that's like 2/3 of your cost from COGS and labor. All right, so if you did like $1 million in sales, your COGS and labors would be around $600,000. That is crazy, right? Okay, in just a minute, I'm going to show you the profit loss statement I developed, which many owners and managers use, and you'll see that it has prime cost built right in. All right, and then let's talk about chart of accounts. What is a chart of accounts? Okay, and a lot of people don't have a chart of accounts, or if they have a chart of accounts, they have a very limited chart of accounts. They're listing like 5 things on there, which you can't have. Okay, and as I mentioned earlier, chart of accounts is a list that outlines the inflow and outflow of money. It includes categories like assets, liabilities, revenue, expenses, and equity, which are organized under the balance sheet accounts, assets, liabilities, and owner's equity, and income statement accounts like your operating revenues, your operating expenses, non-operating revenues, gains, non-operating revenues and expenses. That's a lot. Okay, and to make a chart of accounts more manageable, as well as to see exactly where your money's flowing, it's advisable to break these elements into subcategories such as marketing budget, cost of goods sold, total sales figures and inventory. The number of items on a chart of accounts list can be in the dozens in order to categorize everything properly. As you can see right here, I'm just kind of scrolling through a sample one right here. This is why you really might need help with this. I highly recommend doing this. But let me give you an example. Excuse me, my voice is going. Let me give you an example of the value of getting detailed on categorizing. And this refers to your COGS specifically, not all of your chart of accounts. This is not specifically just your chart of accounts. This is one area of it, but I want to show you the value of it. So when we're talking about bar COGS, instead of just listing bar and grouping all of your COGS and sales in one bar category, you're going to want to break it up into subcategories so you can get more information, especially since different types of alcohol pour at different pour cost percentages based on industry standards. All right, so instead of just having bar, you'd want to list things out such as bottled beer, draft beer, your liquor, your wine, and your non-alcoholic beverages. And you'll see in a minute that when I pull up the profit loss statement template that we have, but the more detailed your chart of accounts is, the more information you'll have. Because if you just have bar and your cost percentage is 22%, you have no idea which categories are meeting industry standards and which ones are not. Okay, because in general, bottled beer and draft beer pour right around 25%. Liquor should be in the 16 to 19% range. Wine can be anywhere from 20 to 35%, depending on the wine, sometimes even more. And non-alcoholic beverages are like 10 to 15%. So you want to break it down because if you have high cost percentage in your bar and you're pouring a lot of wine, you'll be able to see why. It'll make sense. All right, but if you have high cost percentage and you don't pour much wine, you might see that your liquor cost is around 26%, which means your liquor needs a fixin'. All right, does that make sense? And if you have good accounting or bookkeeping service, they can help you with your chart of accounts as well. All right, moving right along, let's talk about what financial templates you should use. All right, well, I'm going to list what I think is important, but it's not every single financial report you can use in the world. I have 4 that I use. All right, you definitely need the basics if you're going to run the business like a grown-up. All right, so you need to have some sort of daily cash reconciliation to start with, or report to record your sales, track your discounts, your comps, et cetera, et cetera. All right, you can see the one we use here that's included in my restaurant management masterclass. This is basic bookkeeping, but you should be able to get all this information from your POS system. Okay, and the next is our profit loss statement, also called an income statement. And to me, this is the most important financial statement you will use, as I mentioned before. It's going to track all of your sales and all of your expenses. And by using the statement, you can determine the cost percentages in each category to determine if you're on track or not. Okay, your profit loss statement can also be compared to your budget projections to see if you're where you're supposed to be. Okay, and as promised, this is a glimpse of the profit loss statement you can find in my restaurant management masterclass. It's not as extensive as some P&Ls, but it is an extremely useful and valuable tool. And as you can see, we have all the categories broken down over here. And if you take a look, you'll notice that the COGS and the sales categories match, so you can determine your cost percentage for each category as they relate directly to each other. You need to set it up like this. Okay, this template is also a 12-month template, so you can view your current month or choose any month to see your year-to-date numbers, which gives you an overall average of how you're doing for the year. Okay, and as I mentioned, we have the prime cost calculation listed right here, along with the industry averages of each category for you to reference. Okay, now you don't need to use mine, but you or your accounting service should have something like this. Next up is the cash flow statement, so you can see exactly where your money's coming and going. All right, we use a weekly cash flow statement in the masterclass, which you can see here. But by analyzing the cash flow statement, you're able to identify areas where you can improve cash flow, such as reducing expenses or increasing revenue. Okay, you can also use the statement to forecast future cash flows and plan accordingly. All right, and then finally, we have the balance sheet, which provides a snapshot of your financial position at any specific point in time. All right, and this includes three main categories: assets, liabilities, and equity. Basically, on the left side of the balance sheet, you have assets, which you own, okay, as a restaurant owner. And on the right side, you have liabilities and equity, which is what you owe, all right, at any given time. At all times, both the left side and the right side must be equal, which is why the balance sheet equation is assets equals liabilities plus equity. Okay, the balance sheet can get complicated, which is why I use an accounting service for this, because accounting's hard, as we've learned. Okay, in general, assets represent everything that the restaurant owns and has control over, things like cash, inventory, equipment, property. Liabilities represent everything that the restaurant owes to others, such as loans, accounts payable, and taxes owed. Okay, equity represents the residual interest in the assets of the restaurant after deducting liabilities. Okay, it includes the owner's equity, which is the total amount of money invested in the restaurant by the owner. Okay, as well as retained earnings. Retained earnings is the portion of the restaurant's profits that have not been distributed to the owners as dividends. Okay, and that's all I've got to say about that. That gets complicated. That's a definition of everything to give you an overview. And again, even when I say it, it's still confusing. I get it. So, that's why I always hire accounting service to get it all done. Now, there are other financial reporting tools and templates you can use besides just these four. Okay, like we use a weekly prime cost report, which gets into more detail about the prime cost, kind of shows you what's going on. You can also use a budgeting template, which is smart. This is like a financial plan that outlines the expected income and expenses for a specific period. Okay, and when you're creating a restaurant budget, you need to consider things like fixed and variable costs. All right, fixed costs include things like rent, utilities, insurance. Your variable costs are going to include food, labor, supplies. Okay, and you should also consider your expected revenue and profit margins when creating a budget. Okay, but for accounting purposes, the basic four reports I listed are a necessity to running a smart business. So make sure you have those locked down. Okay, hang with me just a little bit longer. Okay, we're almost to the end. All right, so with all this complexity going on with your finances, we need to ask, what are the tools you need to succeed? What's going to make your life easier and your numbers the most accurate they can be? All right, let's go over them. First off is your POS system. Okay, you need a great POS system for many reasons. All right, accounting just being one of them. I'm not going to get into all the reasons you need a great POS system. We don't have time, but your POS system should be able to spit out all of the financial data when it comes to sales and transactions. With most of them, you can integrate with some sort of accounting software like QuickBooks or something. Okay, and then we have inventory management software, which of course is what we do here at Bar Patrol. We're all about inventory management. An inventory app and software to track your inventory and do your ordering and invoicing so you can see exactly what's going on with your inventory at all times. Accounting software, like I just mentioned, like QuickBooks being the most popular. Having accounting software is key to making your life easier for accuracy and when it comes to your accounting numbers. Okay, obviously. And then we talked about accounting services, which we're also going to talk about next in more detail. I highly recommend, I've said this over and over again, I highly recommend accounting services. All right, as the saying goes, know your strengths, outsource your weaknesses. All right, there's no need to, go bald pulling your hair out. All right, hire an accounting service to do it all for you. And I know you're probably worried about the expense of it all, but they will actually help you at least make your money back, if not more. And you're going to save your time and your sanity. All right, and then finally we have payroll services. This is another area that can easily be outsourced because it is extremely time consuming. Okay, and then finally, let's talk about the best accounting services and bookkeeping services out there. And if you want to go that route, which one should you choose? All right, well, after much research that I've done, these are the best ones that I've found. All right, bookkeeper360.com, Zendu, and I'm kind of putting these in order that I like them, but any one of them will be good. Bench is good, 1-800-ACCOUNTANT, and then there's actually a QuickBooks Live, which is an additional cost of just having QuickBooks. That one's kind of my least favorite, but it's still good if you're a big QuickBooks fan. Okay, so I have those links in the description, and a couple of them have real barman deals attached to them. So you get like 20 or 30% off your first 3 months. So if you're going to go this route, use the links, save yourself some money. Okay, I've listed which ones have the deals in the description. But ultimately, the decision to hire a bookkeeping service depends on your individual needs and your circumstances. Okay, if you feel that you're spending too much time trying to manage your finances by yourself, or you're not confident in your ability to manage your books, which is most of us, all right, hiring a bookkeeping service is the way to go, and it's what I would suggest. Okay, however, if you have experience in accounting and you prefer to save money despite the time you're going to have to spend on it, then that's the way you should go. Okay, so here's what's what. All right, as previously stated, this was a crash course to give you an understanding of restaurant accounting and what you need to do in order to get things in order. Okay, it is by no means an exhaustive tutorial on accounting. If you really want to become an expert, you'll need to go, take a class yourself to do that. All right, personally, I'm into outsourcing, but it can certainly be valuable to know what's going on yourself. Okay, sort of like when you bring your car into the mechanic, it's nice to know a little bit about cars so they don't screw you over. All right, they're like, the manifold's cracked, so you're going to have to replace that, and you've got some carburetor combustion going on, and I don't know. I don't know what the hell I'm talking about. I'd be like, I thought the manifold was like a sandwich, like a manwich. All right, so hopefully my mechanic's not watching this video. He's going to take advantage of me. Okay, anywho, thanks for being here. I hope this helps you, get you going in the right direction when it comes to your bookkeeping and your accounting. I want to thank you for hanging out with me today. I'm going to see you next time. I'm out.